Hello, everyone. Welcome back to the channel. Matt with Green Bar Trading here. It's been a few days since I've made a video. I've been very, very busy. But what better of a day to make a video than on this crash of a day? So the SPY very clearly has totally broken all of its very, very key areas to hold. Now, we still have 10 minutes left in the market. So we've seen, these rallies happen right towards the end of the day. If that does not happen, we're going to be closing under that trend line. And I'm just going to show you guys here. So we're going to be closing under this trend line that dates back since October. So we're going to have to turn this, not green anymore, but we're going to turn this white. So this has been breached. It's been broken. We're currently under that. And the 200 moving average sits just about 40 cents or so above where we are now. If we close below that, you're talking about a break of the 50. You're talking about a break of the trend line and the 200, all in the same day on high volume. That's not very good. Now, if we do reclaim that 200 and trend line, that would be pretty bullish. But as far as this day goes, with the VIX up 16% on the day, that's not a time that I would be, pushing all my chips into the center of the table going long. Now, we have the jobs report tomorrow. So keep in mind that is also going to be a big report. Now, something that I noticed today, which is why I really, really got short the market at about 130 or 145 or so, and made $231 just on 3 contracts, just a quick scalp as the Qs were sinking. But something that I noticed here is on the bonds. We're seeing a rally in bonds right now. When the yields come down on bonds, usually what has been happening is the equity market will go up, right? They trade inversely to each other. Yields go down, market goes up. The market is crashing and the yields are going down at the same time. That is telling me that there's been a flight to safety, right? Selling equities, putting money into bonds. The more people that buy bonds, right? A rally in bonds, that yield goes down. So that's what we're seeing here today. Very interesting stuff, as well as the VIX. Like I said, the VIX up a pretty big amount. By pretty big, I mean massive. Look at this chart on the VIX. It's literally straight up since noon. And also something else that I noticed today. This is really, really important. And I posted this in our Discord. When we start to see, like jobless claims, for example, came out this morning, and it was actually a worse than expected number. What we've been seeing with jobless claims is a better than expected number. Now, when we see a worse jobs number, which should be good for the equity market, maybe, the Fed will start to take these into account and pause. We've seen the jobless claims that have been really, really low, less people filing for unemployment. We've seen those days just tank the market. All right. This was the opposite. The jobless claims actually came in higher than expected, but the market still sold off. So you're seeing a disconnect between yields, economic data, ahead of an employment report. I know this is a lot to take in. Trust me, I get it. But, I said once you start to see this disconnect, watch out. The market can really, really take off to the downside. If we don't have anything to root for here and the jobs numbers come in tomorrow, who cares what they say? if now all of a sudden it's starting to disconnect a little bit from the economic data and we just see, the VIX going up and some more selling. So just keep that in mind. Not a mind reader. Don't have a crystal ball. I'm just, showing you guys what I am seeing. All right. So it looks like we have about 4 minutes left, clearly under the 200 on the SPY, clearly under the 200 on the SPY. So on the Qs, what I traded, we're breaking down. We're not at that 200 and the 50 yet. In my weekly watch list video, I said we have not seen that golden cross happen yet, where the 50 goes over the 200. All right, we've seen this back in 2001 or 2002, where they got close, but then did not cross over. I don't know if that's going to happen again. I'm just showing you guys, if we do see a very big sell-off, this will start to flatten out. This will start to also flatten out, and you might not get that cross. You might not get that cross. So just keep that in mind. And then on the SPY, during the weekly watch list video, we said, is this going to be a bull trap? We were coming off these two big green candles, which I had shown was very similar to this bounce right here. Okay. We got that Monday push into the trend line and then have sold off since. All right. So obviously, with the break of all these key levels, key indicators, key trend lines, jobs report tomorrow, I can't get, be very bullish at this point. So odds are this cluster down here, it's possible 380 gets retested. And then if that doesn't hold, you're pretty clearly going to be testing lows. And this is just one bad day, but on the weekly chart, this was kind of an interesting, candle here that we saw last week. That's a very bullish candle, right? So it looks like that pullback got a bullish weekly candle. Like we had said, it might be a bull trap, and it 100% was a bull trap. I don't care what happens tomorrow. That was a bull trap. If you were buying into thinking we were going to go up, you got easily stopped out by now. So yeah, that's where we are right now. And like I said, made a quick 231, was not here basically all morning, was looking at my phone on Discord, kind of just telling people what I'm seeing at the moment. And, got home, got into 3 puts, took my profit, went to the gym, and now I'm making this video. All right. So 1 minute to the close, and that's where we stand. Thanks for watching, guys. Hit the thumbs up for the video. I'll see you on the next one. Take care.